Okay, it's that time of year again. GSTR 9 filing. We all know it can be a bit of a headache, right? Well, for the 2024-25 financial year, there are some really crucial updates you absolutely cannot afford to miss. So, over the next few minutes, we're going to walk you through a clear step-by-step guide to make sure your filing is spot on and, most importantly, penalty-free. So, are you feeling ready? I mean, really ready? Because this isn't just about summarizing your numbers, it's a full blown reconciliation of your entire financial year. And with some key changes in the mix for 2024-25, getting every little detail right is more important than ever. Don't worry though, we're going to break it all down for you.
All right, here's our game plan. We'll start with the basics, how to even get into the GSTR9 form. Then we'll talk about the data that's automatically filled in for you. After that, we're diving deep into the trickiest part for most people. That's right, the ITC maze. We'll also cover the big changes for this year, and we'll wrap up with a final checklist and a close look at those pesky late fees.
Okay, section 1. First things first. Before we can even touch the numbers, you got to be able to access the form on the portal. So let's talk about how to get it enabled. So here's the deal, and it's a big one. The system literally will not unlock your GSTR 9 until every single GSTR 1 and GSTR 3B for the financial year is filed. If you have even one return pending, you're completely locked out. No way in. But once you've filed everything, the system automatically opens it up for you and starts pulling in all that data from your previous filings. All right, moving on, let's talk about that auto-populated data. You know, the stuff the system fills in for you. It's supposed to make our lives easier, right? But listen up, there's a really critical detail hidden in Table 8A. That's the one for your input tax credit. And if you're not paying close attention, it could lead to a very costly mistake. So what exactly is Table 8A? Think of it like this. It's the government's official tally of all the input tax credit you should be able to claim. It's all based on what your suppliers have filed in their own returns. This table is your absolute starting point for making sure your books match up with what the system sees. But, and this is a big but, here's where it gets tricky. The portal gives you two different views of this data. You've got the online screen, the user interface, and you've got a downloadable Excel file. And you'd think they'd be the same, right? Well, plot twist. They can actually tell two completely different stories. Okay, so let's break this down because it is so important. The online view you see on the website, that is your source of truth. It's the clean, final version. It only shows you the ITC you're actually eligible for. It's smart enough to exclude things like reverse charge supplies or invoices that were later amended and became ineligible. Now, the Excel download, think of that as the raw, unfiltered data dump. It has everything, including all that ineligible stuff. If you just trust the Excel file without checking, you could easily end up claiming credit you're not supposed to. So the takeaway here is simple but critical. Always, always trust the online view for your final numbers. Okay, deep breaths, everyone. We're now heading into what is, for many, the most confusing part of the entire GSTR 9, that whole cycle of claiming ITC, then having to reverse it, and then maybe reclaiming it later. Getting this sequence right is absolutely vital. Let's start with the easy one. Scenario 1, the whole cycle happens within the same financial year. So you claim it, you reverse it, and you reclaim it all before March 31st. This is pretty straightforward. Your initial claim? That goes in Table 6B. The reversal? You report that in Table 7. And then when you reclaim it, pop that number into Table 6H. Easy peasy. Okay, but what if that reclaim doesn't happen until the next financial year? Now things get a little more complicated. And the answer, believe it or not, depends entirely on why you had to reverse the credit in the first place. And this is where you really need to pay attention. Let's look at the two paths. On one hand, if you reversed ITC for what we'll call other reasons, say you never actually received the goods, and you reclaim it next year, you have to report that reclaim in Table 13 of this year's return, the 24-25 return. But on the other hand, if the reversal was because of Rule 37 or 37A, which is usually because you didn't pay your supplier on time, the rules are totally different. In that case, you don't report the reclaim on this year's return at all. Instead, you'll report it in Table 6H of next year's GSTR 9. This is a massive distinction, and getting it wrong can really mess up your filing. All right, let's talk about what's new for 2025. The GSTR 9 form isn't set in stone. It evolves. And this year, there are a few important changes to the tables. The good news? They're mostly designed to make our lives a little bit easier. So what are these changes? Well, first up, reconciling your ITC just got way simpler.
The system isn't linking Table 6H to Table 8B anymore, which should mean fewer headaches with mismatches in Table 8B. That's a huge win. Second, they've added a new row, Table 8H1, specifically to report ITC on imported goods that you claim in the next financial year. This brings a lot more clarity. Also, the system is now smarter. It pulls in values from GSTR 1A, your amendments, when it auto-populates your sales figures. And finally, a nice little bonus, there's a new downloadable Excel file to help you consolidate all your HSN details for Table 17.
Okay, we're almost there, folks. We're on the home stretch. But before you even think about hitting that submit button, we have to talk about one of the single most important updates this year. It's all about how late fees are calculated specifically for the GSTR 9C.
And seriously, this is a big one. If you're required to file a GSTR 9C, you have to get this. The late fee calculation is now a two-part system. I'll say that again. Filing your GSTR 9 on time is not enough to stop the penalty clock anymore.
So how does this new system work? Well, the late fee for your GSTR 9 is calculated the same as always. It starts on the due date and stops when you file. Simple. But now, the GSTR 9C has its own separate late fee clock. And this is the key part. That clock starts ticking from the later of two dates, either the annual return due date or the day you actually file your GSTR 9. And that clock just keeps on running until you finally file the GSTR 9C. So yeah, you can now get hit with two separate late fees. Let's make this crystal clear with a couple of examples. In our first scenario, you're a star. You file your GSTR 9 on December 25th, well before the deadline. Awesome. Zero late fees for the GSTR 9. But you kind of drag your feet on the GSTR 9C and don't file it until January 7th. The system will automatically slap you with a 7-day late fee just for the 9C. Now, scenario 2, you're late with both. You file the GSTR 9 on January 5th, so you get a 5-day late fee for that. Then you file the 9C 2 days later on the 7th. Guess what? You get an additional 2-day late fee just for the GSTR 9C. And the scary part is the system does all of this math for you. Okay, I know that was a lot of information. So to make sure the most important stuff really sticks, let's boil it all down into one final simple checklist. If you remember nothing else from this entire breakdown, remember these 3 things. Number 1, trust the online view. For Table 8A, the online portal is your source of truth, not the Excel file. Got it? Number 2, know your reversals. The reason you reversed an ITC claim determines where you report the reclaim across different financial years. It's a critical difference. And finally, number 3, file both on time. Your GSTR 9 and GSTR 9C have their own separate late fee clocks. Filing one on time doesn't save you from penalties on the other. So let me leave you with this question. Is your business's annual GST health check complete? Try to think of this whole process less as a chore and more as a really thorough financial checkup. Because getting it right isn't just about dodging penalties, it's about making sure your business's financial reporting is solid and accurate for the entire year.